contributed to your earnings performance this quarter? Year on year, the results have been stable, but if you can just throw some more color on the segment-wise performance.
I think the positive aspect is that after some time, though the revenue has been flat in this particular quarter, but we are seeing an uptake in the overall demand cycle, which is starting with the cables and wires. So there has been a negative growth of 5% in cables and wires. But if you look at the volume growth, considering the commodity price decline, the volume growth has been quite good in this cables and wires segment, which is close to about 10% overall, which actually is a positive point, because the demand uptake starts with the cables and wires cycle. And I think this is where we believe that going forward we'll actually see, which has also been reflective in the month-on-month numbers. Sequentially, performance is improving in most of the product categories, which is a reflection that things should start looking positive from here. Overall, the kind of expectation that we had expected in the second half, it's not started on that note. However, it seems that sequentially things are improving a little bit month by month.
Is there any change in the guidance, or is it too early to talk about that?
I think it's still a bit early. As I said, we were expecting a better second half anyway, which we continue to maintain. So I don't think we would be in a position to give a number or a growth number at this stage. But definitely we can say that we are looking at growth in the second half.
Okay, well, actually your optimism is showing off in your stock price as well, Mr. Gupta. But anyway, which segment will drive the growth going ahead?
As I said, it has started off with cables and wires, but over the next few quarters, we'll see growth in all the segments. Basically, as long as there's a uptake in the consumer sentiment, the demand cycle starts improving for switchgear as well, for consumer durables as well. We're seeing a decent growth in the fan segment in this year. So I think overall we'll see in most of the product categories, especially in lighting, we've also seen that there is a big demand uptake in the LED segment. And this quarter our growth in LED has been 88%, despite the fact that our lighting growth is very muted, because the traditional technologies are coming down also at a fast pace. But the good thing is now almost 45% of our sales is coming from LED, which definitely shows that lighting should also see some good growth in the coming quarters.
Okay, the margins have improved for the switchgear and the cable segment as well. Is this sustainable?
Yes, definitely I think it is sustainable. In switchgears there is a lot of cost rationalization which has happened. Even on the sales side, there is improvement on the realization front. So switchgear, we have seen that over the last couple of years, it has grown from 35-36% to about 39%. So rather than looking at quarter to quarter, I think the best thing would be to look at over a couple of years, and I think we have shown tremendous improvement there. Cables and wires also, yes, there is a little bit of a benefit coming out of the lower commodity prices, but also the fact that we have made various changes internally also, so we feel that these contribution margins will be sustainable.
Okay, Mr. Gupta, a word on Sylvania's performance, basically demand in the European region?
Sylvania, I think unfortunately we saw a good performance coming out of Latin America in this quarter. Unfortunately, it is marred by a big foreign exchange loss in Latin America, approximately about 3 million euros. The rest, as far as Europe is concerned, or even Latin America is concerned, if you look at the seasonal impact, if we take away the holiday season of August, generally there is a stable performance in Europe and improvement coming out in Latin America. Had it not been marred by this forex loss, which I think we see the foreign exchange loss bottoming out now. So over the next few quarters, we should be seeing improvement in PAT levels at Sylvania.
Okay, one macro question just to understand the turf. Are you seeing any improvement in consumer demand, domestic consumer demand? Is there any revival on the ground currently?
I think given the last couple of months' performances, we see definitely there might be an uptake in the coming quarters. It's still very early days to say, but you know, I think we are quite hopeful for the coming 2 quarters.
Okay, any word on new product launches?
Well, every division we've been launching new product categories, you know, but there's nothing significant as a new business or anything. But in every product category, be it switchgear, we have launched the Euro 2 MCB, which is the latest design in the country in the switchgears. So I think every division is launching their own new product categories to stay ahead of the competition.
When can we expect Sylvania to get back into the green?
As I said, Europe, you know, still the demand is sluggish, so you know Europe will continue to remain stable, but we are seeing a lot of improvement coming out of Latin America. So I think we are quite hopeful that we should be seeing green in Sylvania in the coming quarters. The best part is that there is a significant debt reduction at Sylvania. Last year in the same quarter, the debt was around 56 million euros, which is now down to about 26-27 million euros. We've always maintained that Sylvania will continue to be self-sustainable in terms of funding requirement, and also now with this receivable financing facilities, you know, the move is to make Sylvania also debt-free in the next 1 or 2 years.
All right, Mr. Gupta, we'll leave it at that. Thanks for joining us. Well, the market is still down about 0.5%. The needle hasn't